just joining, we're going to wait a few minutes to start it. This is Jim Goodrich, and Glenn is in the lower left-hand corner, and he'll be presenting most of the property tax stuff. And then Mark's in the lower right-hand corner with Alliance Bank. And then Jennifer Potter, who everybody knows, is up in the upper left. And so Jennifer and I were just talking about the market, and we're going to put a slide up here in a minute that shows how the showings have changed. Whenever people like Jennifer book a showing, they have to go through a central agency, and they keep track of all the showings. So it's really a leading indicator of what's going to be happening out there in the future. And so we'll put that up in just a minute. But I was just telling Jennifer that I was looking at this the other day and looking at the New Jersey numbers, because you have a client in New Jersey that's ordering appraisals here, and they just think, you know, we're just all hell in a handbasket here because they are in New Jersey, but you know, it's quite different here in Texas. So I think, what are you seeing out there, Jennifer? Are things starting to pick up quite a bit, or?
Well, what's going on right now is a lot of listings that typically would be hitting the market right now are held back, just waiting to see kind of what's going on, or a lot of people are just paranoid of the safety aspect of having strangers through their house, you know. Yeah. So, but the crazy thing is there's still plenty of buyers locally and relocation people that still need to buy. So we're actually seeing multiple offers on several properties. Homes with pools are actually, you know, going under contract sight unseen. So I'm doing a lot of videos right now, video walkthroughs, just so people can see it virtually. So, you know, we're in a very great, you know, area. We're a relocation destination. So, you know, just the unfortunate part is a lot of those people can't physically get here. Yeah. So, you know, so a lot of people, we're having to, you know, really pivot, I guess is the word everyone's using right now, and use a lot of the technology, the FaceTiming, the Matterport 3D tours, just different things so people can physically or can see and imagine what the space, how it feels, the walkthrough, the floor plan. I've had 2 listings where we've actually went under contract, you know, sight unseen, and then they end up, you know, coming in during the inspection or at some point just to actually see it in person. So, so I don't know, so it'll be interesting to see as more states start opening up, and hopefully everyone, you know, things start turning around, you know, what kind of pent-up demand we might have out there.
Okay. Well, probably want to go ahead and kick it off. It's about 5 after, and it looks like we're still getting a few people straggling in. So I think, Jennifer, you want to welcome everybody and kick it off?
Yeah, so thank you so much for joining this webinar. It's good to see a lot of names I haven't talked to in a while, past clients. So we're doing this just for a couple things. I don't know if a lot of you are aware that the appraisal districts have delayed when they were sending out the property assessment, the value assessments in the mail. Typically, we have that in hand by now. I know in Collin County, I think May 15th is the date that they were shooting to get them out by. But you know, because of COVID, we are in a different environment where they are not going to be open to you going in person and having a one-on-one discussion to discuss the value and try to protest it. So I've known Jim Goodrich here, and he's been Glenn Goodrich. I've known them for a long time. Mark is my husband, and also he's a lender with Alliance Bank. And so, you know, we just thought it'd be fun to try to get some information out to you ahead of time so you can try to strategize on, you know, if you get that value in and you have a feeling it's too high, or even if you think it's right, but you still want to fight it. There's definitely some tools and a strategy that you should start with from the beginning, and we just wanted to try to give you those tools. And you know, then I think towards the end, you should be able to, I don't know if you can raise your hand or chat to ask some specific questions if we don't cover it through the presentation. But there's lots of different things that I think would be helpful just for most of everyone that's tuning in. So I will hand it off to Jim, and he'll go from there. They're both property appraisers, just so you know too, their background. So they've done lots of appraisals in the surrounding area for a very long time. I guess, Jim, how long have you been doing this for now?
I don't want to say.
For at least
Lynn
10
can
years.
Too long.
Put it that way.
But Mark joined us late, so I just want to make sure everybody knows who Mark is. And Mark, you're with a new company.
Yeah.
New bank, and I've known Mark for, gosh, probably 15 years. He invited me to join Rotary Club a long time ago, and I've known Jennifer, of course, that long as well, and just think the world of both of them. Both of them are just high integrity people, and just you're probably here because you know one of them, so you don't need to know all that, but it's just a colleague that has to work in a different role with both of them. Always look forward to working with them. So Mark, just real quickly, we have worked together in the past with various companies you've been with, and then sometimes we were not able to work together because the banks had a different appraisal list, and I'm glad that you're with Alliance now. And so that's a small bank. What are the advantages of being with a small bank versus some of the big ones?
Well, a lot of it has to do with portfolio lending. We're able to do in-house products and jumbo loans and things of that nature that others are kind of getting squeezed on right now in the secondary market. It allows us to step out of the cookie cutter box and move into construction loans, land loans, farm and ranch loans, and also it allows us to have a deeper dive into our customer and get to know our customer on a relationship basis versus just transactional, sell it on the secondary market, move on type product.
Yep, very good. Okay.
And what's the current interest rate that y'all, because one reason why you really liked and gravitated to Alliance Bank was because of the amazing interest rates that you got.
Now you're going to get me in trouble with CFPB if I don't disclose the APR as well. But actually, the 30 years are in the very low threes, and I've even got 15 years in mid twos.
So if you're thinking about refinancing, that's another option to consider.
And can I say one thing before we move into this, and let Jennifer do this because she handles this in our house, and maybe this was said before I came on, but not only are we trying to get the word out of this product and this service, but I think it'd be a good time to give a testimonial because we used the product last year. How did it work, Jennifer?
Well, so that's what's interesting. This year, the property tax program that we used, it pretty much speaks the language of what the appraisal district, how they speak. And so, and it, to me, it's like Chinese. I don't get it at all. And I'm in real estate. But we went through the steps and printed it out, and we did it online and it was rejected. But then when I went in person, we were able to get a significant reduction in our appraised value. And so, but that's what's different this year is the in-person is not going to be an option. And even, I don't even know if you're going to be able to go to the board. That's kind of why we wanted to have this discussion here. It's going to be a different strategy from what we've ever dealt with before. So, but this, definitely just a testimonial. We use this because it's things that I can't even do on my own as a realtor, and I have access to this data.
Well, Glenn is definitely going to cover that. It is going to be very difficult this year, or different, I should say, not necessarily difficult, but I know he's going to cover that. I promise we're going to get to the property tax. That's why everybody's here, but we wanted to take just a quick 5 minutes and talk about the market because that seems to be everybody now. There's just, as Glenn said, there's a big void out there with where we are and where we're going. And so I'm going to talk about where we are. I'm not going to talk about where we're going because I don't know. So I'm going to see if I can do a screen share here and put what I think is a very interesting chart in front of you. Okay. Is that showing time chart up there, Glenn?
Yes.
Okay, good. So this is an index graph, and this is taken from the agency when, like I said, when Jennifer and her colleagues get ready to show houses, they call in and make the appointments, and the showing time schedules the appointments. So all the showings go through them. And so they've got some very valuable data out there that we're going to look at. And what they do is they produce this, what's called an index graph. And they start with January 1st. That's their base week, the first week in January. And that's over here at the far left right here. And you can see that that starts at 0%. So we're looking for how the showings have changed since the first of the year. Okay, so first of the year they started out, that's the base, so that's going to be 0. And so let's look at just the blue line for just a second. That's 2019, that's last year. And so as any realtor can tell you, it's kind of dead in January. February starts to pick up a little bit, and you get into March and you see it starts accelerating and comes up here. This happens to be Easter week, so it dropped off there, and then it started back up. And if we could go out and extend it through the summer, we'd continue to see it come up, and then it would start to come back down as we get back to December. Normal market. So the tan line is 2020. Started out the same, crescendoing here through February and March, and get up to about March the 10th or 11th. And we all know what happened there. And all of a sudden, no showings. They just fell off the cliff. And this low point right here is at the end of March. So in 2 weeks, we went from this point up here, which is about 25% above the first of the year, down here to about 42% below where we started. So it's a 60% or so drop in 2 weeks. The interesting thing about it, though, is we didn't stay there long. We started kind of turning out of it. And Jennifer, I don't know how many of these are virtual showings, but I think probably most of these are actual showings, would be my guess. But it started to climb up here, and we are at the point now, if you look at where we are right now, this is at the first of this week. We are actually 19% above where we started out at the beginning of the year. Now, that's not great. I mean, Jennifer would say, well, that's not too great. We should be way up here. And that's right. But look at where we're going. And I'm going to predict that, you know, when we get out here a week from now, it's not going to be long before these lines are going to cross, and we're going to be back to a normal showing time. So that's, to me, that's a very interesting graph. We've got an explanation down here. I'm not going to go through that because I've already talked about it, and we want to get on with Glenn's presentation. So let me slide one other one over here. Glenn, is that the multicolor?
Yes.
Okay, because I can't tell what y'all are looking at. So we just explain real quickly what how we measure supply and demand. It's a very easy metric, and we call it the hotness factor. And it's simply a ratio of the houses that are under contract to the total houses out there for sale. Okay, so for example, if you were driving through the neighborhood and you saw 20 signs and 10 of them had contract pending signs on them, we would say, well, half the inventory is already gone. So that's a 50% hotness factor. If you saw no contract pending signs, that would be 0%, pretty bad market. So in a normal market, about 25 to 35% of the houses are under contract at any given time. So if you're working with Jennifer and you're looking at properties, 2/3 of the signs out there typically are available. 1/3 are probably already taken. So thought it would be interesting to look at where we were last year and where we are this year. And so so we don't eat up any more time with this, I'm gonna focus right on McKinney right here, since that's where many of you are probably, in the $4 to $499 price range. So this would be your typical Stonebridge Ranch house, let's say. So last year at this time, 24% of the properties were under contract. This year, 31% of them are under contract. That's probably a little surprising. Most people would think, well, it's, you know, that's really surprising, but that's what it is. So those numbers are pretty close, and they're both within reasonable norms. But let's look at the number of listings over here. Last year we had in the $400,000 price range, 4 to 5, we had 184 houses on the market. And this year, only 131 on the market. This data is about a week or two old, so it's not totally accurate, but it's pretty close still. So the listing inventory is off about 30%. And if you look up and down here in these various markets and price ranges, you'll see that's pretty common, with the exception of Allen in the $200,000 price range. That really hadn't been affected very much. But for the most part, the supply of properties for sale has shrunk by about 30%. And the properties that are pending under contract, you look down here, it's also shrunk by about 30%. So the supply and demand is in sync, it's in balance still. So what this chart is telling us is, we look at two metrics. We look at what is the volume of activity. Well, it's off. It's off. Every real estate agent can tell you that, every title company can tell you that, every lender can tell you that, and every appraiser can tell you that. But if the volume is off, does that mean the prices are softening? And my answer to that is no, we're just not seeing that yet. We may not see it. And the reason is, what moves prices is not volume of sales. What moves prices is supply and demand, just like anything else. And when you have the hotness factor being pretty constant right here, look at Frisco in the 3s, 38% last year, exactly 38% this year. We're just not seeing that change. So if we start to see those numbers this year go down, the hotness factor, then the market will be a little softer and we may see values drop. But we're not. Let's just do one more here. Look at Allen in the 2s. 66% were under contract last year. That's a white hot market. Remember, that's the 200,000 to 300,000. This year, 59% under contract. That's still white hot in anybody's book. So that's what I see out there. I just don't see that we're going to have any softening prices that I can tell. So I'm going to kick it back to Glenn. And Glenn, I know you're going to cover this, but everybody wants to know, what's the COVID situation going to do to property values this year? I see a lot of chatter in the newspaper articles from around the state of people asking the governor to freeze values at last year and that sort of thing. Right. Go ahead. I know you got a presentation, and I'm pretty sure that's in it. If not, would you be sure and cover that for us?
Yeah, that's actually what I cover in my first slide. So can you just give me a thumbs up or verify that you can see the presentation?
Yep.
Okay, good. So what I did with this slide right here is this tracks the Dow Industrial Average from May of last year to May of this year. And what I'm trying to show you in this graph is that the appraisal district is gathering evidence during this period of time. Like, they're gathering all their sales and all their market evidence to value properties, because the date of valuation in the property tax world is January 1st. So this year it's going to be January 1st of 2020. So that's what this line right here represents. Well, then you see what happened with COVID, and then the Dow just kind of fell off and then rebounded a little bit. So there's kind of two worlds right now. Taxpayers are living in this kind of red box down here on the bottom right, and appraisal districts are living in this green box on the top left. And why I'm saying that is because it's a legal obligation. It's actually in the law that appraisal districts have to value a property as of January 1st of the tax year. So that leads into what's going to happen with values this year. Well, the answer to that is, and the answer to that always is, it varies depending on which appraisal district you're in, and even within the appraisal district, it'll vary depending on which area of the county that you're in. But in general, we're going to expect that appraisal districts are going to increase values, and that's not just a guess. We've already seen that in certain areas that have already released values. So this is a map I did of Harris County. Harris County was the first major appraisal district to release values. And so we looked at it as kind of like, well, how is a major appraisal district going to handle this COVID situation? And maybe that'll be a crystal ball into how other appraisal districts will handle it. Well, Harris had a median percent change in residential of positive 4%. And some areas that are kind of in the darker red here saw increases above well over 10%. Okay. Well, since I've done this chart, we have some more information locally. Of course, Jennifer pointed out earlier on that we're still waiting on appraisal notices from certain appraisal districts like Collin and Dallas, but Tarrant has already released values. What's interesting about that is they showed a 0% median change in value, but for residential properties, there's a positive 4% change in the appraised value. So is my screen sharing paused by any chance? I'm seeing a note of that. Are you guys able to see my slides still?
I see a slide that's it's appraisal district and then taxpayers. Is that the right slide?
No, that's not the right slide. Resume share. Okay. Are you guys seeing a different slide now? Got it. Yeah. Somebody said that they couldn't see the map.
Yeah, I never saw a map. So I don't know if you want to go back.
Okay, here. Can you see the map now?
Yes.
Okay, sorry about that. I don't know what happened with the screen share. So this was the map I did of Harris County that was showing they had a positive 4% increase in value. Why that was important was that they were one of the first appraisal districts major to release values. And so we were looking at how appraisal districts might handle valuation. So to bring it more local, Tarrant had a 0% median change in value, but the appraised values for residential properties went up by 4%. So if you're sitting there wondering I don't understand that. What's the difference between why is there a 0% median change in value, and what's this appraised value figure that you're talking about? If you don't know what that is, you can join the millions of Texans that don't understand that, but it's actually a very important number that is actually more important to your tax bill than the market value at the appraisal district. So there's two values that you have at the appraisal district. One is the market value, and that reflects what the appraisal district thinks that your property will sell for on January 1st of that year. The appraised value is really important for properties that have homesteads on it. So if it's your primary residence and you claim it as a homestead, you're getting a homestead exemption on it, the appraised value can only increase by 10% every year. Your taxable values are based on the appraised value, not the market value. But what's confusing is the value that you can dispute with the appraisal district is only the market value. You can't dispute the appraised value. So to bring that to better understand what happened in Tarrant County, Tarrant County went wild with values last year. They increased properties in a lot of areas by 15%, 20%. Some of them were even 30%. And so to see a 0% median change in value this year isn't that surprising because they went so crazy last year. But what you're seeing is that the appraised values are kind of catching up because the market value is pulling the appraised value up. So by a lot of areas, the maximum of 10%. And so you're seeing this big discontinuity between the market values and the appraised value in Tarrant County because they were so aggressive with values last year. I know that's really kind of confusing still. So the takeaway, just keep in mind, you can only dispute the market value at the appraisal district, but your taxes are based on the appraised value. So if you don't think you can get the value in your protest, kind of close to the appraised value or even below the appraised value, you might want to reassess if it's worth your time and effort to do it. I kind of have some general rules for that, and we kind of discuss that more in Help Center articles. So a good resource that we offer for free to everyone is help.propertytax.io, and you can search for appraised value in there, and you'll find some Help Center articles that help guide you in that decision-making process if it's worth filing an appeal if you don't think you can get the value below the appraised value. So in Denton County, we show that they have a plus 1% median change in residential value for 2020. And again, a 1.5% change in appraised value because they were really aggressive with values last year. What's interesting about Denton County is it's very segmented on how the values were hit this year. So many areas were hit by more than 5% increase in value, like Argyle, Carrollton, Lake Dallas, and Louisville. And so other areas were not hit so hard. So the positive 1% is kind of a good general rule for how Denton treated values this year. They did go up slightly, but certain areas saw 7-8% median change in value. So individual neighborhoods within those cities could have been hit even harder than the 5 or 8% that I was talking about. Rockwall showed a positive 3.6 median change in value. They've already released values. Their deadline to file is May 15th. So I'm saying all this because a lot of you are in McKinney or in Collin County, and you're wondering how's Collin County going to handle it. And I'm kind of painting the picture that Harris County, the biggest appraisal district in the state, increased values. And then we're seeing areas around locally that have already released values and they've increased values. With the exception of Tarrant County, but Tarrant County I think is a little bit of an outlier. I was kind of expecting that to happen. So you see, I think Denton County is more of an indicator of what you might be experiencing here in Collin. And I just think Collin's attitude in general is to be aggressive with valuation. So I do expect in Collin County values to increase. Outside of the appraisal district world, the other part of your tax bill with tax rates, we're seeing cities and ISDs are worried about budgets. Their sales tax revenue is way off. And a lot of them are also expecting lower property tax. And some of them are expecting issues in collecting property tax. So they're all kind of sounding the alarm that we're really worried about our budgets. Some of them were already in trouble before all this happened, and this is just kind of compounding that even more. So why that's important is because, okay, we've talked about how the appraisal district's values are likely going to increase, and I'm going to kind of cater this presentation to the Collin County crowd because I feel like that's where most of you are, but this really also applies in general. With budgets being a concern, the local taxing jurisdictions have a lever that they can pull to help out with that, and that's the tax rate. And so you're seeing increased values, and now we're expecting a potential increase in tax rate. So it's going to be kind of a double whammy on your tax bill this year. What's particularly of concern this year is that with COVID, the governor of Texas declared a state of disaster statewide. And there's some, I won't get too much in the weeds because it's kind of a wonky conversation with the law, but why it's relevant to you as a taxpayer is that there's provisions in a law that was passed last year, Senate Bill 2, that if a disaster hits, then the taxing jurisdictions can increase tax rates at a steeper rate than they could previously without seeking voter approval. The reasons that was put into the tax bill was because of they were coming off of Hurricane Harvey, and they were looking for ways of helping local taxing jurisdictions collect more revenue and kind of cut some red tape. And so they said, okay, ISDs and cities and county or ISDs are capped at 2.5% under the current law, and cities and counties are capped at 3.5%. But when a disaster hits, they can increase up to 8% without seeking voter approval. And so there's the argument that's being floated out there that while this is not a disaster in the traditional sense that was intended by the law, like a flood or a tornado, that we are under an economic disaster. And they're tying that together by the governor, one, issuing a state of disaster in the state of Texas, and then also requesting federal funds to help with that disaster. And so the combination of those two things, I think you'll see taxing jurisdictions say that we're reasonable in the assumption that this qualifies as a disaster under the law, and therefore we are going to try to increase our tax rates at a steeper rate. I don't know if that's going to happen, but I think that's a vulnerability. It's being discussed. And what's kind of tricky about this is we won't really know what's going to happen until later this year when they start talking about tax rates, which happens in the fall. So I'm just kind of saying, watch out for that. Keep that on your radar. I'm going to, more of the immediate focus of what I'm talking about is with dealing with appraisal districts and protesting your value for the remainder of that. But I thought this was an interesting point to bring out, and I'm trying to get the word out to get that on people's radar as well about tax rates.
Well, and
so this year, yes.
Let me ask you one thing on that. So let's say Collin County does decide to up it this year. Does it stay at that rate? for years following that, or how does that work?
No, it won't. Oh, yeah, they can keep it at that because it only looks at the increase. It only looks at the increase year over year. And so if they did get it up, they could keep it up. They just can't go up again if there's not another disaster declared. And keep in mind that they can increase without voter approval up to 2.5% for ISDs and up to 3.5%. So even if 3.5% for cities and counties. So even if they don't take advantage of the disaster declaration, you could still see increased tax rates without that. And I kind of think that they're also looking at the good times are over, or we're concerned at least about collections and revenue. And so we might take advantage of this year to kind of grab that as we can in anticipation for troubles ahead. So this year I think is really important with property tax because I've shown you that a lot of areas have already increased values. I think in Collin County, we're going to see increased values with the appraisal district. We might see increased tax rates. That's a question mark, but there's some red flags around that issue that are unique to this year dealing with COVID and the disaster. We're already seeing troubles in our economy with wages falling, unemployment rising. Our comptroller, Glenn Hager, has announced that he's expecting Texas to officially announce that it's in a recession. And in fact, he's already said that we're already in a recession. We just can't officially announce it yet because we don't have the figures. But they're expecting unemployment in Texas to be in the low double digits. So all this to say that you're probably going to be getting a higher tax bill when we're going to be in a recession. And so I think that's why you really need to pay attention to property tax this year. And I say property tax and not just property tax values because of the tax rates also being a part of that. So pay attention to the big picture, values and tax rates. This year is also complicated because the deadlines are all over the board. In Collin County, your deadline to file a protest is going to be June 15th this year. They won't be sending out notices until May 15th. And keep in mind that if you don't receive a notice on May, they don't have to notice everybody all at the same time. In fact, they hardly ever do that. They notice most people, a vast majority of people will be noticed on May 15th. But if you receive a notice a little bit after May 15th, your deadline is going to be 30 days from when you receive that notice. Dallas is going to be, and that applies to every county. Dallas, the deadline is going to be June 15th. Denton is May 30th. Rockwall is May 15th, and Tarrant is June 1st. So that's super confusing because there's 5 different deadlines there. So we also have on our help center, help.propertytax.io, you can just search for deadline to protest, and we have this broken down there. So if you need to reference that later, you can. The most direct impact that you have on your tax bill is protesting the appraisal district's value. Like I was saying, the tax rates, if they do take advantage of the disaster declaration, they can increase that without seeking voter approval. In other words, you have no say-so. You have no control over their ability to ratchet up that tax rate unless they go over 8%. And again, I don't know if they're going to do that, but that's a vulnerability. So what you have more control over is filing a protest with the appraisal district. And we're big proponents of doing it the right way. What that means is make it evidence-based. That makes the decision maker's job really easy. I define decision makers in kind of 2 categories. One is an appraisal district appraiser. So you can file an online appeal and the district appraiser can get back to you with an offer and to reduce it. And if you like that offer or you accept it or you're willing to swallow it, even though you're not fully happy with it, but you think it's not worth the trouble to push further, then that district appraiser has decided to lower the value for you. So they're a decision maker. Submitting evidence and letting them know which comps you're choosing and why you're choosing those comps, and something that formats nicely into their system so that they just don't, a lot of people send in evidence and they think it's going to work out one way in their system and it ends up spitting out a totally different value. And so if you're precise in what you present to them, that makes their job super easy. And I think that's going to increase your chances of getting a reduction. But if that doesn't happen with the appraiser district appraiser, then there's a second set of decision makers called the appraisal review board. And those are just regular tax-paying citizens like you and me. They are not employed by the appraisal district. In fact, they're a separate entity from the appraisal district. And I'm saying that because a lot of people kind of get nervous if they have to go to the ARB. And, you know, I've done this hundreds, thousands of times, presented cases in front of the ARB. And I still get nervous before the hearings, but I kind of settle into it. And they're really not there to hold value as high as they can. They're there to be fair referees of the process, if you will. And they can listen to certain information and consider things that the appraisal district doesn't. So you can kind of make arguments that will work at the ARB that won't necessarily work in informal working with the district appraiser.
So
my
Glenn,
website,
I have a question
yeah.
for you on ARB. Do they have to have any real estate experience, or what has been your experience in the residential hearings? I know in commercial, sometimes I'm lucky enough to have a commercial appraiser or maybe a commercial real estate agent, investor, somebody like that, that's a player in the market. But in residential, is there any experience requirement?
No, there's no experience requirement. You do have to pass a test that's controlled by the state comptroller. I will say though that in Collin County, I think that they do a good job of trying to recruit people that have knowledge of real estate. I think they're actively seeking out people like realtors to serve on the board, but that's not a requirement. You just have to be, you know, you can't serve on the ARB if you work for a government body because there's a conflict of interest there. So you can't serve on it if you work for a school district or the city, because you would be making rulings to lower values that would directly impact a budget of a body that you work for. So they disqualify those people from serving on the board. There's other disqualifications, like you can't serve on the ARB if you're a first relation to a property tax consultant that's active in the county that you serve in. So there are some people that can't work on the ARB, but that's kind of a small group of people. But it mainly just consists of just normal tax-paying citizens.
Okay.
Yep. So my website's Property Tax IO, and we're known for our instant and free analysis. You can go there and enter in your address, and we'll tell you upfront what we think the recent sales, looking at it through the appraisal district's system, if they'll help or hurt you if you file an appeal. In over 10 years in working in property tax, I've learned that the appraisal districts have a huge technological advantage. When I first started out, I didn't just build this right from the get-go, my website right from the get-go and go to work at the appraisal districts. I built it out of frustration of having things not work, where I would try to use sales, and I would go there and present a list of sales, and the appraisal district would run it through their system, and they would say, oh, when we make all these adjustments to your sales, we actually come out with a value that's much higher than what you think. And so I kept wondering how that was happening, what data they have that I wasn't looking at. And so I finally just kind of went all out and just got real nerdy with open records requests and data, and kind of just reverse engineered their systems. And that's kind of where we're at today with Property Tax IO. So this was I graduated from Texas A&M. If you're not from A&M, I'm not trying to offend you, because I know that's a hotly debated issue. If you didn't go to A&M in Texas, you probably hate us. But this guy, why I brought it up is because TexAgs is a online discussion forum, and it's super active in Harris County with property tax. Like, they talk about property taxes all the time. Not so much up here in the DFW area. So if you're from A&M, I encourage us to be more active about property tax on TexAgs, because they do it right in Harris County. But this guy experienced the same thing I was just talking about. He said a house with the same floor plan in the same neighborhood was noticed at $11,000 less than he was. He tried to use that property as evidence to get the value lower, but they ran it through all the adjustments in their system, and it pretty much came out to be equal with his property. So that's a very common story. I've personally experienced that early on in my career. So what we do is we level the playing field with the appraisal district in just a few clicks of the mouse, and we make it easy to produce evidence that's compliant with their system. And, you know, in this point of my presentation, it's going to be a lot about my product, but I don't want to confuse that with you absolutely have to use my product to do it this way. I learned, I'm not I didn't invent the best way of working with the appraisal district. I just figured it out. Other people have done, other top property tax consultants have their own way of doing it. So I've just figured out what's worked in their systems. And so if there's ways that you can do this without using my product, but we just make it super easy, super convenient. And if you don't have the skill set of working with data, then it's going to be kind of hard to do what we do. But there's other ways that you can do this I'll get into later on that you can kind of really simplify it, and it can work for anybody. So this is kind of what our reports look like. What's really important about what we do is we offer this executive summary. I think that's really important. So whether you use our reports or not, I think when you're presenting your evidence, especially this year, when there's going to be no in-person processes, you're going to have to be really tight and really concise with your written communication with people. And so an executive summary is what I recommend. What we do is right from the gate, we tell them, here's the value I'm asking for. So you could do this in a Word document if you wanted. Here's the value I'm asking for, and here's why I'm asking for it. I'm asking for it based on a sales comparison analysis that I've done. And we provide a short paragraph that describes how we constructed that sales comparison analysis. And then you can, later on in the packet, you can see the details of the sales comparison analysis. I think maps are very important because it shows where the comps are. They don't always know if you're choosing comps from across a major road or not. And so you can go into Google Maps and add pins for properties and kind of do a screen capture of that map yourself, or you can even print the map. Of course, in our reports, we automatically do all that. This is where probably a lot of people are going to not have the same advantage that we have, is because all the adjustments that we're making for every property, that's done just through open records and just years of experience of working with them. So if you don't want to use our software, some adjustments to look out for are the additional improvements. So does a property have a pool and you don't have a pool, or do you have a pool and a comp you're using does not have a pool? You're going to need to make an adjustment for that. Sometimes you have a larger or smaller garage than the comp. And so these are all things that a realtor would do when they're pricing your property anyway. But the appraisal district just has very specific formulas that they use to value it. And so what a realtor might value a pool at, the appraisal district's they may not be valuing a pool the same way. Or, garage or any, pick your item. There's any number of things that they don't adjust for, or that are just differently than how a realtor would look at it. Or even Jim, who's an appraiser that's on this webinar, how he would look at it. They have their own world of valuation, essentially. That's just more detail about what we have. But, if you're kind of throwing up your hands right now and you're thinking that this technology is too complicated and too complex, and I don't stand a chance against their system, I'm here to tell you that that's not true, because the biggest advantage is that you know more about your property than anybody else. You can beat their system by telling them something that they don't already know about your property. And here's a little secret. They actually welcome that. They welcome you to tell them something that they don't already know about your property. And I'm going to show you the right way of doing that. So here's a big headline that was from the Dallas Morning News a couple of years ago. Here's how I knocked $13,000 off my property tax appraisal in 30 minutes. This process was so easy, I'm vowing to protest every year. And it was written by Leona Allen. Leona did not use our product. So I'm going to describe a workflow that she did that's not specific to my website, propertytax.io. It was inspired. Her story inspired us to build her workflow into our tool, but you can certainly do this without that. So she filed a protest online. She got a realtor friend to gather recent sales of comparable homes in her neighborhood. And then she got photos of recent sales from Zillow and Trulia. And then in her hearing, the district appraiser lowered the value to the average of the recent sales that she brought in. Now, when I look at this, I'm picking out points where she could have probably done better. Are all the sales that she's using, are they all credible comps to use? Is the average really the number that she should have been going for, or should she have been leaning more heavily on one or two comps that are really the most similar to her property? Is she accounting for all the adjustments? In other words, did some of the pools have pools that are indicating a higher price per square foot than her property that doesn't have a pool. So there's all kinds of things that I would look at in my system and that Jim would look like and that Jennifer would look at to value a property that was not done in this process. But the bottom line is this was a relatively easy process and she got $13,000 knocked off the property. I think what set her apart from a lot of people though is the photos that she put in. A lot of people just kind of go in there with just a PDF document, a list of sales. Realtors can provide CMAs. I'm not here to beat up on CMAs. I think they serve a purpose, especially if it's a conversation that a realtor is having with you. It's a launching place where they can kind of inject their expertise into specific comps and make adjustments kind of on the fly there. But the CMA has a lot of gaps in it in the appraisal district system because it just looks at a price per square foot. So they're going to say, oh, you're missing this adjustment, you're missing that adjustment. And you know, it doesn't give any context about the property. So I think the photos that she did, the additional step of going to get photos was a really good thing that a lot of people don't do that I think helped her out a lot in this argument. And so we took that process and we baked it into our tool. So here you can use photos to say things like, oh, that comp's kitchen is nicer than my kitchen. And you can upload a photo of your kitchen. So it's a nice side-by-side comparison, and you can make your own adjustment saying that it would take me $25,000 to upgrade my kitchen to look like this comp's kitchen. And what you've done here is you've now overridden the appraisal district's condition of the condition adjustment that they're making between your property and another property. And you're saying, I disagree with that because of this photo that I've included comparing my kitchen and their kitchen. So again, you don't need my tool to do that. We've made it super easy and convenient and it's baked in, but here's what that looks like in the report. So again, if you don't have our report, you can use a Word document to do this where you maybe get your photos from Trulia or Zillow or maybe the realtor is providing you photos as well. You could pop open like a table in Word and drag the photos and kind of do the 2-column table so you can get a nice side-by-side comparison. But we always say, okay, I'm making a $25,000 adjustment for this comp based on this photographic evidence that I'm showing here. And that's showing them something that their database isn't going to be looking at. That now, what you've done now is you've automatically taken more control over the narrative in the negotiation by having a focus on photos that you have provided instead of keeping them behind their computer screen looking at just the data. So photos get them outside of the database and they give you more control in the process and in the negotiation, because no matter what their database says, photos, I mean, it's a cliche, but photos are worth 1,000 words, and you can show where their database is wrong with photos. You can't disagree with what I mean, we all have our subjective opinions about what we're looking at, but if you're pointing it out, at least you're reasonable behind your disagreement with them. We also coach you throughout the process and to help you feel empowered with the information to succeed. One of the benefits I want to emphasize today is that we're not just a software company. We provide coaching and strategizing where you can chat in with us, email us, and we'll help you craft a narrative, or we'll help you counter the appraisal district if they've come in with something, or they've made you a value, is it fair, or they sent me this evidence, what do you think of it? And so this is another case study that we developed from an actual user last year, and we baked this also into our software. So this was a real case study. This it's titled, "Is this comp's pool only worth $4,000? Seemed like I'm being valued too high based on a glitch in the appraisal district system." And again, why this is important is it's not specific to my software, but it teaches the story of if something doesn't make sense from the evidence that they gave you, you should look at it a little bit closer and ask questions and not just accept it automatically. So he was noticed at $448,000. And when he went to our website, we said, you should try to go for a value closer to $425,000. He filed the protest and requested the appraisal district's evidence. Let me pause there real quick, because requesting the appraisal district's evidence is crucial in this process. What that does is it forces the appraisal district to show you the information that they're going to use to value your property, and they have to supply that to you 14 days in advance of your hearing. So it makes them show you their cards, and you can adjust your strategy. So that's what this guy did. He requested their evidence. They supplied his evidence, and so that's kind of where I'm going to pick back up in the video.
Glenn,
So he filed it.
can you stop?
Yeah.
Can you hold it just a second? I want to go to Jennifer and maybe get some comments, or Mark, either one really, because last year, I know you guys got the evidence, Jennifer. So what was your experience, and having the evidence, what did that enable you to do that you couldn't have done otherwise maybe?
Well, what it helped me really see was what comps they were using. And when I say comps, it's not just what has sold. They're actually making adjustments for my neighbor's house, across the street, down the street, people that are the original homeowners. They're making adjustments across the board, land value, all of that. So it was very eye-opening for me to see everything that they are using. And again, I did this online and protested, and originally they just declined it. So then I went in person informally to have a discussion. And what I did take the pictures, and I actually was showing listings of mine that I had sold and said, I know for a fact this house, they did this, and my house looks like this. And the pictures were, I think, the key in getting the reduction, as well as whatever, all the report itself and the way it showed everything. But I think, just to answer your question, Jim, it was very eye-opening to see, how everyone else was laid out in their program versus our house.
Yeah. And I would like to jump in and say, just the average person out there, we always hear a price per square foot, and it's much, much deeper than that. And this program, or the tools here, allow you to, like you said earlier, speak a different language. You're interfacing with them in the manner in which they disseminate information. Am I correct, Glenn?
Yes. I mean, it took us years to get to that point, and not just years of average Joe Blow, but years as a property tax consultant, working hundreds of cases with them every year to learn the ins and outs of their systems. It was just extremely frustrating to present a comp that you would think was going to help you and you would base a strategy on, and then in the blink of an eye, they run it through their system and it tells you something totally different and then now you're scrambling. You're like, you're having to think on your feet. And to tie it back to why it's important to request their evidence is, when you request their evidence, you get to look at it before you discuss it with them, or before you go into your ARB hearing. So you're not having to think on your feet. You're getting to look at it and prepare a strategy and understand and ask questions if you need to before you go into the ARB hearing. Because the last thing you want in ARB hearing is for them to say is to have misconceptions about what information is going to be used or how it's going to be used. So when you request their evidence, you know exactly their cards, you know exactly which comp they're going to use that supports a high value. Maybe you can go and get photos of that comp and show upgrades to it. Even if it doesn't, just something that shows that you've done your homework, because what that will immediately do is separate you from a lot of other people that go in there that literally do nothing. They just file an appeal, and then they go in there, and then the appraisal district just kind of owns them with their system and software, and they just say, here's the comps. Okay, we've supported our value, so what do you have to bring to the table? And then they're looking at this price per square foot thing, and maybe it's not even sales of price per square foot. Maybe they're just looking at neighboring properties price per square foot. And then the appraisal district is going to say, well, now you're arguing equal and uniform instead of market value, and they're going to run an equal and uniform analysis on it, and it's going to come out to be maybe $1,000 less or right at the value that they have, and you thought you could get a $15,000 reduction, and the hearing's over and you really got nothing to go in there with. So we really set out to eliminate that with not only the offense of providing the best information to help you make the best argument, but now I'm talking about a defensive tool that says, okay, once you request their evidence, how can you start picking it apart? And that's really what this guy did in this case study that I'm going to do. And I think you'll see the power of it. So to kind of recap.
1 second, Glenn, I'm sorry.
Go ahead.
You mentioned the equal and uniform, because that was one thing that Jim, last year I was so baffled by. There's two different disputing, I guess, routes that you go with the appraisal district. And, and I've been working on getting, protests for clients for years, and I wasn't even aware of that. Is this a time you can kind of explain the two options, or is there a different part in your presentation?
Yeah, it's sure. I mean, we're already paused right here, so I'll just start this video over again when we go to it, just to kind of recap. But since I did bring it up, equal and uniform, so you can file your appeal on two ways. One is market value, and see, what's frustrating is each appraisal district kind of has different language that they use for it. So in Collin County, when you're filing a protest online, it's first of all, it's kind of a confusing online protest process. And if you go to again, this is all free. You don't have to sign up or anything with us. If you go to help.propertytax.io and search Collin online protest, we have step-by-step instructions on how to file the protest online there. But this ties back into the equal and uniform. What is equal and uniform and versus market value? When you file your protest, you have to say what the basis of your protest is. And there's two ways you can do that. And you can check both. So you can file on both. One is market value, and they call that the value is incorrect. And then there's equal and uniform, and Collin calls that the value is unfair. What's tricky is a lot of people, they associate taxes with fairness, and they just say, oh, my value is unfair. I'm going to file a dispute on my value is unfair. And they're going to, I don't know if it's incorrect or not. I'm just going to file the dispute's unfair. Well, first of all, do not do that. Do not check only that you're filing a protest that it's unfair, because what that does is essentially says I'm only filing an appeal on equal and uniform, which means that if you want to go in and start using sales to lower the value, they're going to say, oh no, you're discussing evidence that's not relevant to the case because you filed an appeal only on unfair, AKA equal and uniform, not on market value, AKA incorrect. And so you can't introduce evidence that talks about the market value, which would be recent sales. You can only talk about what neighboring properties are valued at for your property. So there's the way that Collin County does it is that there's a drop-down menu when you do a file online protest. And what's just super confusing is that it's actually what's called a multi-select combo box, which means that you can do that drop-down and you can select multiple items in that drop-down box. Because normally when we see drop-down boxes on web forms, we think we can only select one thing. And so a lot of people just think they can only select one thing. And so they see, okay, unfair just sounds like the right thing to check, and I'll do that. You actually have to select both unfair and incorrect. So equal and uniform, what you're doing with that, and it is a legitimate basis to file a protest, but what you're saying is that I'm valued unfairly when I'm looking at other properties in my neighborhood. They don't have to be recent sales or anything, but you're just saying that I'm valued unfairly when I look at my neighboring properties that are similar to me. They're valued way down here and I'm valued way up here. And I think that I should be lowered down to the median of what this sample that I pulled is valued at. Having said that, it's equal and uniform hardly ever works out the way that people think it's going to work out. They think they've got this best argument because a lot of people pick and choose comps. And what happens is when you pick, like, let's say you go through the neighborhood and you pick all the low comps in your neighborhood, all the properties that are valued low by the appraisal district, they're just going to come back and pick all the properties that are valued high in the neighborhood, and then it's going to be a wash. And so I have personally done equal and uniform appeals that have gotten big reductions before, but it's very rare that it works out the way that you think it's going to. And so I emphasize mainly for my evidence to use market value, because I think there's a lot more meat on the bone to look at market value, because keep in mind the appraisal districts value neighborhoods at a time, not specific properties. So if you're looking at equal and uniform, you're looking at this property over here that's potentially valued high, this property over here that's potentially valued high based on market value, and you're not looking at recent sales that could be used to get the value lower. Because if they overvalue you on market value, it's likely that they could have overvalued your whole neighborhood on market value. So it's really important to look at sales with that. Okay.
Funny that.
Yeah. So this is a case study, again, just to recap. We were going about why it's important to request the appraisal district's evidence and the power that what that empowers you to be able to do to prepare ahead of time. So he was noticed at 448,000, and he went to our site and we said that you should try to go for a value closer to 425. When he filed the protest, he requested the appraisal district's evidence. They emailed him an offer at 441, and they provided 4 comps that they were using as their evidence. So he went into our system and entered in their comps, the appraisal district's comps, and notice how it equals exactly 441. But he noticed that comp had a pool, one of the comps had a pool. And so he went in and said, okay, well, what are they valuing that pool at? And he noticed that it was $12,000. And so he goes to the photos and sees, okay, that does not look like a $12,000 pool. That looks more like a $25,000 pool. And so he tags that photo and then makes an adjustment to account for that. Notice how it's bringing their value down because they're underrepresenting what that pool's value is. He goes to another comp that had a pool. Again, he's looking at the comps that have pools because he doesn't have a pool. And he looks at that and he noticed that they were only valuing that one at $4,000. And he's like, there's no way that that's a $4,000 pool. It's more like $25,000. So he's adjusting that down as well because they're underrepresenting what that value is. So he's gotten their value from 441 to 433. But he's like, well, since the pools are kind of an issue, what if I just remove those comps altogether? And he got the value down to 431. So using the CAD's own evidence and adding photos showing that the pools were worth way more, the ARB panel members reduced the value to 430. So again, you don't need my software to do that. You can do things like going on Zillow and Trulia and getting photos. But again, we just make it super fast and convenient, and you're using all of our, I think one thing that we do is that's going to be hard for the average person to do is be able to understand exactly how that property is going to adjust in their system and where to pick it apart. And so we have an online chat, and he chatted in with this afterwards. He said the tip on the pools made all the difference. When he mentioned the pools, the ARB just pretty much stopped listening to anything else because I think they looked at the photos of the pool and they just realized how ridiculous it was to do a $4,000 adjustment for a pool, and that this guy knew what he was talking about. The owner of the property is, absolutely right. So the chair actually thanked him for a concise presentation. And I think that's key because being concise, knowing exactly what you want to talk about in the ARB hearing, which again is related to requesting their evidence because you know exactly the points that you want to focus in on, and you can prepare a strategy ahead of time instead of just seeing the comps for the first time in the hearing and trying to understand what's going on and kind of stumbling around and figuring it out and taking forever. This guy was concise, and keep in mind these ARB people are there all day and they just want to get through as many cases as they can. So the more honed and focused you are on what you say, the better. As a kind of FYI, he said the owners before him were on an 07 losing streak. So in other words, this ARB panel was not just a panel that was rubber stamping reductions for people. And what I liked about this also was he said without you, and then I highlight and the report, he couldn't have done it. And so why I highlighted and is because to emphasize again that we're not just software, that we coach as well. So it's a combination of the two. So 2020 is going to be the year of the remote appeal. Submitting credible evidence online is what the appraisal districts are begging you to do. They are begging you to use their online protest system. And the best way to do that is when you file your appeal, go ahead and submit your evidence. And in Collin County, you can request their evidence all in the same process. That's why it's super, go ahead.
Sorry. There's a question on here from Wes asking about if you bring up the pool impact of the valuation, is that going to then result, I guess, in an increase in his neighbor's value? Or
no, it won't, because I will give the reason why this was so he actually tried to do the same thing that you guys did last year, where he went in and talked informally with the district appraiser, and he kind of got the sense that she understood exactly what he was saying and that he was kind of right, but that her hands were tied because they're very systems driven. Everything's on a depreciation schedule. And so their biggest concern is being fair to everybody, even above being correct. If they're they would rather be incorrect on everybody than correct on some and not on others. And so they're not going to pick out a specific property's pool and say, oh, we got to go back in the system and fix that. They would have to fix the whole depreciation schedule that would impact all the pools in that neighborhood. And, you know, are they going to do that? In working years, I haven't really seen them touch those depreciation schedules a whole lot. I think they just kind of, it works as far as being fairness because it's a system-driven adjustment. It's not something that a specific appraiser at the appraisal district is deciding. So I don't ever see them do one-offs to make adjustments in their system. They have to fix a whole model to do that,
Okay.
which is a much bigger effort.
Hey,
And
Glenn,
Oh,
Yes.
I saw that there were, since you answered that question, there were a couple of other questions on the chat. So maybe we go ahead and wrap those up or
Okay.
get those answered.
Sure. Okay, I see one that says, is the 10% property tax rate subject to the disaster declaration? I'm going to try to interpret what that means because I'm not exactly sure, but I think you're talking about the homestead cap of 10%. Does the 10% property tax rate subject to the disaster declaration?
you know how you have that cap, 10% cap?
Yeah, the homestead cap, that's not tied at all to a disaster declaration. That's been well established for years and years and years in Texas to ease the tax burden or the tax rate or the tax bill hikes for homeowners of their homesteads. But if you're talking about and you're maybe joining late and you're very well educated about what's going on, we were talking earlier about tax rates like McKinney ISD, for instance, as a taxing jurisdiction. They could potentially increase their tax rates, but that's totally different than the homestead cap of 10% increase. That's not going to be impacted at all. That's in cement with yeah.
Okay.
Okay.
And then I'm not sure which slide. I think this has been a while ago that Nick was asking. Nick, do you remember what the slide was?
Oh, okay. Okay. Actually, let me circle because they clarified on that. Can they raise the 10% homestead cap? Be similar to how cities can go into the disaster. No, there's nothing in the tax bill that would let them increase the homestead cap from say 10 to 20%. Simultaneously, there's nothing in there that says that they can reduce it from 10 to 5%. So it's going to be 10%. It's locked in at 10%. It's not tied to the disaster. I hope that answers that question.
And
yeah.
Then Chuck had a question back to the photo comparison. Would it help to also provide an estimate from a third party, like a bid, I guess,
Yeah.
whenever you're proposing that?
That's even a higher level. That's even better. Absolutely. Yeah, because that shows that you've done, so the photos would get you an A, that would get you an A+.
Okay, and then Patrick asks, when we file the initial appeal and request the district's evidence in the same time, is that all in the same form or does it have to be done separately under a different link on the district's website?
With Collin County, I'm going to answer that, with Collin County, when you file the online protest, it's all in one process. If you're requesting their evidence, it's like a little checkbox that you check when you submit your online protest. If you're outside of Collin County, like in Dallas County, for instance, you have to actually mail in that request for the evidence outside of their online protest. I have not seen on Dallas County's website, on the Dallas Central Appraisal District's online protest website, where you can request their evidence. They do have an online portal that they will show you what they're going to use. The problem with that, and that's better than nothing, if you don't want to mail it in or, but here's the problem with that though, is that if you don't officially request that evidence, then even though they're showing you certain information, but you have not officially requested that evidence, they could change that evidence before the ARB hearing. So I've had this happen in Dallas where people go in and they discuss their case with somebody, a district appraiser, and they are looking at the evidence that the appraisal district is using, and thinking that that's what they're going to go to the board with. And then they go to the ARB hearing and they say, well, this is different evidence than what they provided me. And they say, well, we're allowed to do that because you didn't make an official request for the evidence. And so again, in Collin County, if you're in Collin County, it's super convenient. You can just check a box when you file the online protest. But if you're like in Dallas County, you might need to mail in that request for evidence. And you just simply say in the mail, and I would send it certified, saying that I'm officially requesting the evidence that's going to be used in the ARB hearing for my property, and then identify your property, like by the address, and then ideally you would have the appraisal district's account number with that.
And then one other question, and then we can get back into the remote appeal. Allison asked, she had actually had a neighbor's house that suffered a fire and left the house vacant. Will that affect the rest of the property values on the street?
Probably not, because the way that the appraisal, so this ties into a bigger issue of how do you quantify it. There's any number of arguments that people make that seemingly make common sense. But again, in the appraisal district's world, I go back to fairness, that they need something to quantify decisions that they make. And so if the vacant house is impacting your value, how could you quantify that, and how could they put that in their system to get an adjustment down for that? That would be very hard to do. So short answer to that is probably not. Probably wouldn't help you. Just trying to help you save time and not bark up the wrong tree, and hone your strategy of getting a reduction on what's actually what I have experienced and have coached other people that have actually worked really well.
Perfect.
Okay. This is kind of a reiteration of what I've been saying, but I think it's worth saying again that there's going to be no in-person meetings, meaning that written communication is super important this year. On our packets, we have page numbers on there. So if you are submitting evidence, like, we say page number 1, number 2, number 3, if you are submitting your own evidence and not using our packets, number your pages, because if you get where you have to be on a telephone conversation, then you can say, turn to page 4, and they immediately know where to go. That's just a little thing that you can do to make it super easy. Here's what we do. We provide that executive summary. Again, you can use a Word document and just type it out, but be concise. Say exactly the value you're asking for, and how you got to that value. And then what evidence are you using to get to that value? So in this example, we're saying we're asking for $462,000, and I'm using a sales comparison analysis, and I'm taking the average adjusted sale price. That's a keyword, adjusted sale price of 3 comps. And I say adjusted is key because that's different than a price per square foot. You're accounting for differences in size, in land value, in pool, not pool, in appraisal district world, covered porches, stuff like that. So all 3 comps are located in the same neighborhood. We're speaking the appraisal district's language here by providing the neighborhood code to them. You could just say the name of your neighborhood if you weren't using our technology. And then the subject property is the property that you're valuing. So that's going to be your property. So when we said the subject, again, that's valuation speak for the property that I'm valuing. So all 3 comps are the same building quality rating. Again, that's appraisal district speak for the quality of construction for the property. If you're in Collin County, you could say I selected comps that are all the same builder as my property. That would usually correlate to the building quality rating. But again, we make it super tight with them. They know, okay, we're in the same neighborhood and we're same building quality rating, RF12. And then we're saying that the subject does not have a pool. 2 of the comps like the subject have a pool and 1 does not. It's not hard to do your homework, and it makes the decision maker's job a lot easier. The biggest reward that we have is when we help somebody who's never filed a protest get in the game. The word empowerment comes up repeatedly. I'll go back to the story from the Dallas Morning News lady that I talked about. She had never filed a protest before, and she felt very empowered having gone through the process and accomplished a reduction. She didn't really know what she was doing ahead of time, and she got through it and got results. And so if you've never filed an appeal before, you know, you're in good company. There's lots of highly capable people out there that have, you know, and you don't have to be a rocket scientist to do this really, even though I've made seem like what we do is really complex, because it kind of is. You don't have to take the very complex, you know, first of all, we make it super easy so you don't have to get complex with our website. But if you want to go on your own and not use our website to do it, there's other ways that you can do it that are not that difficult to do it, but just doing your homework, like providing photos, something that separates you out from everyone else. That's really not that complicated to do. We've all looked for houses on Zillow and Trulia and stuff, and we've seen photos. So it's not that hard to go that extra step and provide something and kind of do a deeper analysis and side-by-side comparison of your kitchen versus another kitchen. Because that's common sense. When you're going and considering to buying a property, you're doing that process instinctively. You're saying, do I like this kitchen? Do I not? So just kind of go to that level of things. Don't be intimidated by the systems. Again, photos will get you outside of that system, and they'll let you be more in control of the conversation.
Glenn, I have a question for you. You talked about that lady that spent 30 minutes and got $13,000 off her taxes. Equate that to money. How much money does that put back in her pocket?
Well, if I'm using like a general 2.5% tax rate, that would probably be somewhere around $600 in taxes. Am I right about that? No, that's more like $300.
So, okay. So 30 minutes worth of work, $300.
Well, and what she did also was, you know, she filed her online protest, but she didn't say that she submitted her evidence online either. Maybe she could have avoided this whole having to go down there to the ARB and submitted her evidence ahead of time. You know, what she did was she just filed the protest and then gathered her evidence later to get ready for the hearing.
Okay.
Yeah.
She could have submitted it online, and we don't know that for sure. But basically, I just worked the math real quick. I put you on the spot. You didn't have a calculator, but it's saved her about $300, maybe $400 in taxes. So that's a pretty good hourly rate.
Right.
And kind of leading into that, I had another kind of a follow-up question. The reports that propertytax.io provides, what does that cost, and what kind of value reduction do they need in order to recoup that cost?
So our silver package, which is what I demoed a lot today in the videos, where you can select comps, look at photos, and make your own adjustments and things like that. That costs $75, but I know that the Potters are partners with us, and if you use their promo code or a unique link that they have to our website, that gets you $10 off. So that would bring the cost down to $65. That's one of the benefits of going to our site through our partner network, is that we offer the biggest discounts that we'll ever offer through our partners. So that's the best way to really get the cheapest product. But so when you're paying $65 for it, the average savings that we see people that, first of all, we don't recommend the silver package to everybody that goes to the website. So we're only telling you, we think you've got a case to pay the $65, and the average reduction that we saw in Collin County, or the median tax savings that we saw in Collin County was a little over $450. So you pay $65 to get $450 in tax savings, and you can contrast that with if you hired a property tax consultant to do that. Some of them charge 50%, 40% of the tax savings. You're coming out way ahead with that. And again, you get this sense of empowerment that you can do things yourself. And once you go through the process one time, you'll immediately know more and more about it. And it's not going to be as intimidating, and you'll be able to do it easier and easier every year. And to kind of make this more COVID specific, because a lot of what we talked about was people going in person when they got a rejection online. What I think is going to happen this year is, since there are going to be no in-person processes, including the appraisal review board, that's all going to be done by telephone. And traditionally, only like 40% to 50% of the people that are scheduled for an ARB hearing don't show up for it. Well, because it's inconvenient, because they have to take off time of work, they have to go down there, and it's just not a very convenient process. So this year, with it being all in person, you can, or without being in person, they have to make it where you have to call in. I think it's going to be a lot easier to call in to an ARB hearing from your couch or maybe your home office than it is to go down there in person and wait and all. So it's, so it's going to be a lot more convenient. So I would use that leverage to your advantage, because let's say that they don't make you a good offer initially online, or you're not, or something you think you can get a little bit more. I would counter that and say, make it evidence-based, but say, I really feel like I should be valued here. Can you come down any more? Otherwise, I'm going to have to go to the ARB. I'm going to have to call in, call in. I'm going to have to call in to the ARB. And I think that's going to make them move a little bit more on the value, because they don't want to be overrun with a bunch of ARB hearings on the phone. And so use this year's the circumstances to your advantage to try to push more remotely, informally, because it's going to be super easy for you to call into the ARB. If you use a report like what we provide, or if you use some of the guidelines that I've described earlier, like numbering your pages and submitting a very concise argument, you're going to have all the evidence already ready to go for the ARB anyway. So you're not going to have to do a whole bunch of additional work, and they're going to see that and know that. And they're going to say, oh, this person is prepared to go to the ARB. It's not going to be hard for them, because they've already done all their work essentially. And if you do have to go to the ARB, worst case is you dial in and you've got good evidence and you're ready to go. But I think they're going to work more with you informally this year than years past, mainly through online, because of what they're scared is going to happen if you just call into the ARB. If that number goes from 40% down to 20% no-shows, that creates huge, huge problems for them.
Okay. And then I want to get back to the coaching for a minute. Sometimes I'll look in the chat and watch you guys, and occasionally I'll get in and try to help. How many people do you coach in a season?
Hundreds.
Hundreds
of people. Yeah, some people. It's a spectrum of. Some people just want us to have a look over the report that they're submitting to the appraisal district to see if there's any errors that they've made. Some people get evidence from the appraisal district and they send it to us, and they want us to just say, is this offer fair? In other words, do I have, would you give me permission, or do you, in your expert opinion, do you think that it's a good offer, or should I push for more? And sometimes that answer is, we think that's a reasonable offer, and it's going to be hard to get below that, or sometimes we think that offer's too low, and that here's how you should push for more. You should reemphasize this kind of evidence, and you have potential $500 more in taxes at stake that's worth your effort to push for more.
Okay, good deal.
So go ahead.
I have a suggestion too, that I find, because I'm always here to help with collecting comps for the neighborhood. But what I find a lot of people do, and I know I've been guilty of this, is waiting to the very last minute to start working on it, and then they miss the window of either having an informal meeting or trying to get in and get an ARB meeting. So, while we're all sitting around, not that we're just sitting around, but since we're home and might have a little bit more time, I would suggest, hop on this website and start playing around with it, because we're, pretty sure that values are going to be up again. So why not get a head start and don't wait to the last minute.
I saw one question. I'm just going to read over it. Go ahead, Jim, while I read over this question.
Yeah, I was going to ask Mark, you're kind of watching the questions too. If anything we haven't covered that we should, that's come up that you've seen?
From a lending perspective?
No, just from a property tax. I was just trying to, I know you and Jennifer have been watching the questions, and Glenn's been doing a lot of the talking. Have we covered most of what people want, do you think?
Oh, I believe so. I've already had some text with great feedback, and I think what y'all really done here is highlight what's good about the product and how easy it is, and also educational, without trying to draw everybody into, like Glenn said earlier, into the weeds, because the behind the scenes stuff that makes it so easy is the part y'all put together. The front end is, I think everybody understands what the value is here.
So Glenn, when they get into their board hearing, can they have a lifeline out to you and be coached while they're in their hearing?
Well, there are no cell phone devices allowed in the ARB hearings. So unfortunately, I can't be there in person for everybody's hearing.
Yeah.
And there
Okay.
are no in-person hearings this year. So how are they going to enforce that remotely? I don't know.
Yeah.
They'll probably do a Zoom call. You never know.
Yeah.
You had a question though, Jennifer, you were saying before, Jen, or you were talking, a comment?
No, I just forgot.
Okay. Well, somebody asked a question if our 75 or 65 with the promo code is for each individual property. We have multiple rental properties. It is tied to a specific property, but we do, depending on the size of your portfolio, we do offer volume discounts for that. So just chat in with us and talk about it. But before I would do that, give us the list and we'll just tell you up front which ones we think we can help you with and which ones we can't.
Yeah.
So yeah, we're not interested in, if you send us 10 properties, we're not going to try to sell you on all 10. There may only be 3 or 4 out of those that we think we can help you with.
Right.
Are you able
And
to
is there, go ahead, Jennifer.
and I can't remember, I haven't been on it this year, but are you able to get on the website and just plug in your address and it kind of tells you the likability or I forget what the word is.
Reduction potential.
Reduction potential. So you know at least ahead of time, okay, this is something I need to go down.
Yes, yeah, it is. But for people that have multiple properties, sometimes it's easier for them just to send us a spreadsheet and we'll run it ourselves and give them back so they don't have to go enter in if you have like 3 properties, it's probably easier for you just to enter them yourself. But some people have 40 or so properties and we'll just run it through a spreadsheet. But if you want us to run them for you, we certainly can do that.
Well, and for Jill, who's asking that, she also has her parents and her brother. They have like a whole. I could see that being a lot of different properties that could be potentially put together.
Yeah, and so we just give us a list of the properties, and we'll tell you. We'll do all that work for you, so you don't have to enter them in and look at each individual one and make notes about reduction potential, and we'll just tell you on the list which ones we think are good or not for a reduction.
Did you cover the guarantee, Glenn? I had to leave here
Oh no,
for
I
a little
didn't.
bit. There's a guarantee, I know.
We also guarantee the reduction or your money back. So if you pay the $65 and you don't get a reduction at the ARB, then we'll just refund the money, no questions asked. So we're fairly confident about the product that we offer, and so it has to be a win-win scenario. And anything that you do with us is never going to cost you money. It's also should be important to note that the ARBs, the appraisal review boards, cannot legally increase your value. So there's no risk in going through the protest process because you're not going to have your value increased. It's actually illegal for that to happen. So.
And my mom has a question. Hi, Mom. Y'all also help in Wise County.
We're not in Wise County right now. It's on our, we get a lot of questions, more than I thought we would have about Wise County. So maybe I should look at that again for expansion, but we're not going to be able to get to it this year, but maybe we'll look at it again for next year.
Well,
we did expand into Harris County. We concentrated on expanding into Harris County this past year because that's such a huge county. But man, Weiss just keeps coming up, so it's kind of hard to ignore. So.
You better get on that.
Yeah.
I'll talk to you about what we can do, Mom. Let's see.
Notice the website indicates once we get May 15th for Collin County, the email example. Yeah, so since Collin County does not have values up yet, if you go to our website, propertytax.io, and you enter in your address, you're going to get a little indicator there that says that Collin County is still going to, they don't have notices out yet. So you can sign up and register for free with us, and we'll email you when the values are released. We'll email you automatically your analysis. So you don't even have to go back to our website and enter in your address again. We'll just email it to you directly. I will say that because of COVID, all the appraisal districts are running later with getting their bulk data downloads available. So even though you might get your notice on May 15th, we might not have it available on our website until a couple of days. They actually can't even give us a definitive date when they're going to have that data available to us, but it might be as much as a week delayed. It's just a circumstance we have to deal with this year specifically, because normally they're just right on time with it. So we ask that you work with us and be a little patient with our analysis. We're working on it as soon as we can, and hopefully it's just a couple of days and not a week, but I know Denton was kind of difficult to work with this year, and we just got Denton out just now today. So
I just wanted to make sure that everybody knew I will send the slides up front to Jennifer and Mark, and then they can send those out to you if you're interested in those. And we did record the webinar, so I think Glenn's going to get that to Jennifer and Mark. Is that right, Glenn?
yes.
And then you guys can send it out to anybody that couldn't sign up, or maybe on your list that might just want it. So that'll hopefully help. So I think unless anybody has something else, we'll probably close it out now. We're past our 90 minutes. Any last minute, Jennifer?
One other thing too.
Yeah.
I'll be sure to forward the link that includes the discount through Mark and I. So I've got a note of who all has joined us. So don't worry, I'll be emailing that to y'all so you have it. And then Patrick had a question about his property is listed as confidential.
Right.
So how
Yeah, that's an issue we run into with law enforcement or somebody who serves in public office. Unfortunately, there's just nothing we can do, because if we can access that data, then that means that the people that you're trying to hide it from could access that data as well. So it's, I wish there was
Glenn,
something.
let me jump in there if you don't mind. This is kind of a funny story. It was a couple of years ago, an FBI agent chatted in with that exact same thing. And I didn't have an immediate solution for it. And the next day he chatted back in, being a good investigator like he is, he picked a house with the same floor plan in his neighborhood and acted like it was his and got the analysis and took that in. So thumbs up to him for doing that. I don't know if that works every time, but that was pretty good, resourceful.
Yeah. But unfortunately, we can't access your specific properties information. So that's just a part of open records that protects you, but it makes this particular case a little difficult for us.
is there a workaround that I can do from my end for him?
You could just do, I mean, your comps and
Right.
you know what you would do when you're pricing a house, you know.
Right.
Old school.
Yeah.
Yeah.
Well,
Low tech.
Yeah. Okay, any other questions from anyone? I'm so glad everybody joined us today. I know I've constantly learned stuff on this whole, like, you know, I've been doing this for a while and try to help out many clients over the years. A lot of the people that joined today are people that I've helped on a regular basis. And I'm telling you that doing this program last year was very eye-opening, and you know, it just because it's a whole different concept dealing with the property tax appraisers. They do not operate the way real estate operates and the way it values. So definitely it's very eye-opening and very insightful and helpful. And again, I mean, what do you have to lose? If you don't get a reduction, you get your money back. But it's definitely, you know, I think everyone's going to see some sort of benefit from it.
Well, with that, I think we'll close it out. Thank you very much.
Hey, thank you, Jim and Glenn.
Thank you.
Thank you.
Appreciate it.
Y'all stay safe out there. Thanks.